Good evening, good morning, good night, wherever you're watching this transmission. 'Tis I, Mike Martins. Thank you for joining me so much, guys. I got a really important article that was actually sent to me by one of our followers. Canada's historical debt bubble could hit banks, says Rosenberg. Now, we are in a time of obscurity and darkness and doom and gloom when it comes to finances. And I'm not trying to be all doom and gloom because you got other channels for that. I'm just trying to kind of hit the nail on the head and get to the point and kind of get you guys in the straight and narrow. And if people that have been following me for years and actually took my advice and didn't buy houses in the last 4 years sitting good now. The ones that went ahead and bought in the last couple of years are in a lot of trouble right now because a lot of them did borrow into the equity that they did build. And they're in a lot of trouble with that too. So let's move on. A prominent Canadian economist is warning that the record household debt levels in the country will hinder economic growth and could be a problem for bank earnings. The level of household debt is a big impediment to Canadian growth. It could be a problem. And see, right now we're stagnant. Instead of wealth growth, like back in the early 80s, in the late 70s and the 60s, we would build wealth. We would grow and build wealth, and that wealth would trickle into the economy. People would buy boats, cottages, extra cars, start a business, and that would trickle in. Now we're building debt. We're a debt-burdened society where all we're building is debt. We're no longer creating wealth, and that's the problem. Once the middle class stops creating wealth, rest in peace. It'll be a problem to constraint on Canadian bank earnings, Dave Rosenberg, chief economist and strategist, and Gulskin Associates told BNN Bloomberg in an interview Monday. Is it a question of impairing bank capital? No, I don't see that at all, but I would say we do have still a debt bubble of historical proportions in this country. Now, I'm going to put my stamp on it. I don't have a stamp on me. I'm going to tape this. I'm going to tape it to my forehead, and I'm going to take this with me. I'm going to take my words and eat it if I'm wrong, but I'm going to tell you guys straight up. And I said this the other couple of weeks ago, maybe a month or two ago, about Australia. Canada now is officially at a level that if it was to gear back interest rates to 0%, zero, not 3.5 where it's at, if it goes to 0%, it still can't get itself out of this debt trap. It's done. Canada's also in the boat with Australia. A few months back, looking over, the new Australian report came out a month and a half ago. And the new report came out, the financials, the GDP, the exports, all that stuff, the financial report. And just going over it, I came to the conclusion that even if Australia went to 0% rates, Canada now, officially, if it goes to 0%, it's not going to do anything. They're going to have to drop into negative rate territory. That's if they want to fix this, but I don't think we're kicking the can down the road now for 3 blocks. And where that can originated from, 3 blocks down the road, it's unseen. That can's gone. It's kicked down so far that we're in this obscurity right now. Rosenberg comments come to the heels of new report from insolvency of MNP lots, which receive 48% of Canadians are $200 or less away from financial insolvency. Jesus wept. 200 or less away from financial insolvency. Up 46% from the previous quarter. Those findings came as the Bank of Canada has left its key interest rate on hold since October. Based on the most recent data available from Statistics Canada, a gauge of household debt showed that on average Canadians owed almost $1.79 for every disposable income in the fourth quarter of 2018. Guys, this is death. Death to the financial system here because people are not sustaining and can't service their debts. There's also been a growing chorus of prominent voices in the recent weeks questioning the ability of Canada's big banks to handle a softening in the country's economy. Well, the problem is, and we've been talking about this, we haven't raised interest rates enough to aggregate against some sort of a crash or a thing. We've done it too late. The United States is somewhat ahead of us in raising rates. And the best part is they just like, well, Donald Trump's in power. Let's fix this economy if we can. Let's just raise rates with him in the chair. And if all goes wrong, blame Donald Trump. But it actually kind of stabilized their markets, but they do have quite a bit of mortgages on their water there too in the United States. If you follow my channel, we cover that too. Steve Eisman, the money manager of Big Short Frame, who predicted the collapse of the U.S. housing market, recently told BNN Bloomberg that Canada's bank CEOs are ill-prepared for potential credit losses. They definitely are. So right now, I'm not laying any shorts on my stock, my bank stock. I don't have any bank stock right now. A week and a half, 2 weeks ago, I dumped a fortune into oil, and oil has been, this morning, I had 3-4 people call me. Mike, Baytex, did you buy those shares? I'm like, yes, I did. Holy crap. Mike, have you seen George Soros is buying up more Suncor? I'm like, I know, I bought Suncor like 2 weeks ago. And all the oil, because of something happening with Iran, and we'll get into that on this show. So Steve Eisman is basically understands that the banks, with all the fraudulent loans and banks putting up numbers on the books, just junk on the books, just to reach their quotas, and with a lot of bank lenders and bank lenders and underwriters getting laid off right now because the shortage of applications being taken now. So it's going to be an interesting roller coaster of a ride. Losses from ill-prepared for the potential credit losses if the economy declines. Of the country's big lenders, he is betting against Royal Bank of Canada, Laurentian Bank, and Canadian Imperial Bank of Commerce. So he's hedging against them. So basically, he's putting a put that they will lose. So every time the bank loses, he wins. And that is basically what he's doing. I don't blame him. I have I'm looking at TD. I am also looking at TD right now, went down a couple of dollars today. A buck or two today. So I think that TD is going to keep going down, and I think that a couple other banks are going to be going down. I have them on my radar to rebuy them when they hit bottom, but we're still quite a ways away. Guys, do not take any financial advice whatsoever from me. I can't even read. Make sure you talk to a professional when it comes to investing. If you decide to invest, do not listen to me at all. I'm just giving you discussion pieces for you to be able to look outside the box, you know? The one thing we have kept in mind about the TSX is that it's not a market that's determined by Canadian GDP as much as gold, global GDP. Rosenberg said, we're actually a torque on the global economy. What happens in China actually has a bigger bearing on our stock market than what happens in Canada. Rosenberg said, well, he remains bearish on the Canadian dollar. He sees some upside potential in the Canadian energy sector. Yay! Which has gained momentum as oil prices have marched higher. Guys, I bought in oil two weeks ago. I dropped back into oil, picked up Baytex, Suncor, that other big oil company I picked up too. I picked up quite a bit actually, and I'm looking at Fortis. It's dropping right now. Fortis went down, I think, a buck or two today. So I'm looking at Fortis to see if it hits bottom. I could buy back into Fortis BC. But that's just me. Those are my picks. Don't follow me because, remember, guys, I could take a loss in the markets. That's fine. I still have my house. I still have my livelihood, right? But for some people, I mean, they want to hedge off all the debt they owe. So kind of bring in dividend payouts and kind of hedge against all the debt and all the monstrous debt they owe. That's not good. If you're free and clear and you have a little bit of money, you have no debt, all you pay is rent, or you have no mortgage, yes, maybe trickle a little bit of money here and there, but be careful. Talk to a financial expert that can tell you the information you need to know for your situation. Anyways, I would say that if there is one element of Canadian market that is looking good right now with the upside, without having any incremental positive news for it, would be the energy space, he said. So, guys, take a look at this. Take a look at the article. And I would like for you guys to tell me what is happening. Historical debt bubble, and it's just gonna it will domino effect back to the banks. It will send a reverberation back to the banks. Here it is, guys, and I've said it, and I'm gonna tape it. Canada right now, if it was to go to 0% rates, they still couldn't. They still couldn't because the capital flows from China aren't coming anymore. I don't see a second coming of Christ to help, to stop everything. Basically, the whole world will come to a stop. I don't see any of that happening soon right now. I think someone's got to pay the piper, and I think it's going to be a very interesting way. They've already decreased interest rates to historical lows. It worked for a while. It pumped up assets, and it pumped up the value of assets and creating these balloons all over these major cities and creating fake shortages that didn't exist, delusionary shortages that never existed, and now it's hitting everything. Let me know what you guys think. 0%. If they were to gear back 0% in Canada, Australia we know already. They go back to 0% rates, they're finished. They still can't fix the problem. Now, if they go back to 0 in Canada, do you think we could fix the problem? That's my question to you. Comment below. Remember, take financial advice from a professional. Do not listen to me. I'm just talking here, guys. Thanks for watching.